All right, let's cut through the noise. Today, we're digging into a really sharp analysis from a veteran crypto trader. We're going to break down what's putting pressure on the market right now, and then we're going to look years into the future at some pretty bold price predictions for 2026, and even all the way out to 2030. You ready? Let's get into it.
So let's be real. You've probably opened your portfolio recently and just seen a sea of red, and that immediate feeling hits you, right? Is this it? Is it time to hit the panic button? Or is this just another crazy day in the world of crypto? It's a fair question, and it's exactly where we need to start.
And to get our answer, we're leaning on the insights of a trader named Shuja. Now, this guy's been navigating these markets full-time for over a decade, and his promise is simple. He's going to break down what's happening with zero hype, just the facts. So, let's see what he's got.
Okay, so what is actually going on right now? To really get why prices are doing what they're doing, we've got to zoom out a bit and look at the bigger picture. The major forces that are squeezing the entire market.
And this is where you see that crypto doesn't live in a bubble. Not at all. We've got new tariff threats popping up and just general geopolitical tensions that create this cloud of uncertainty. And what happens when investors get nervous? They run for cover. They pull money out of things they see as risky, like crypto, and pile into safe havens like gold, which has been hitting all-time highs. On top of all that, new global tax rules are making some people rethink their whole strategy.
And here it is, the result of all that pressure. Bitcoin, the king, got knocked back below that $92,000 level. And you know the old saying, when Bitcoin sneezes, the whole market catches a cold. That's exactly what we saw, with Ethereum and pretty much all the altcoins taking an even bigger hit.
Okay, so that's the bad news. That's the stuff that makes your stomach drop. But here's the pivot. According to this trader's analysis, what we're seeing might not be what it looks like. It's not a sign that the party's over. It's something else.
And this is the key takeaway right here. He's calling this a healthy shakeout. Think of it like the market just shaking out all the nervous investors, the weak hands, before it can make its next big move up. It's a test, a reality check, not a full-blown reversal. But, what makes him so sure?
Well, we just have to follow the money and look at the data. And honestly, the signs of strength underneath the surface are pretty compelling. The new spot Bitcoin ETFs, they're still sucking in billions of dollars. Big institutions are still buying in, and they're even staking their Ethereum, which is a massive long-term vote of confidence. And maybe the most important signal of all, the long-term holders, the OGs of crypto, they are not panic selling. In fact, the on-chain data, which is like looking at the blockchain's public books, suggest we are much, much closer to a bottom than we are to a top.
So with that in mind, let's really zoom out. Let's shift from the day-to-day noise and look at the long-term picture, starting with the big one, Bitcoin, because its whole role in the financial world is changing right before our eyes.
For literally centuries, gold has been the ultimate safe place to park your money. It's the bedrock. Well, the argument here is that Bitcoin is quickly becoming the digital gold for our generation. It's not just some weird internet money anymore. We're talking about major institutions, massive ETFs, and even some governments starting to treat Bitcoin as a legitimate strategic asset. This isn't just a small trend, it's a huge fundamental shift.
But hey, this story is bigger than just Bitcoin. Let's talk about the other two giants in this analysis, Ethereum and Binance Coin. Because if Bitcoin is the new digital gold, you can think of these two as the highways and power plants of the crypto world, the essential infrastructure that everything else is built on.
And here they are, the numbers. Just take a look at these long-term projections. By 2026, Bitcoin is seen hitting somewhere between $110,000 and $200,000. But fast forward to 2030, and the range is $500,000 to a full $1 million. Whoa. For Ethereum, we could see $10,000 by 2026 and maybe up to $40,000 by 2030. And BNB is right there with its own massive growth projections. These are some seriously big calls.
Yeah, let's just pause on that Bitcoin number for a second. $1 million. The thinking here is that this isn't some fantasy number pulled out of thin air. It's a possibility if Bitcoin continues on its current path and just captures a small slice of the value that's currently locked up in gold worldwide. It's a huge number, but it really anchors the entire long-term bull case.
So how in the world could ETH and BNB get to those kinds of numbers? Well, they're playing two very different but equally crucial roles. Ethereum is literally becoming the backbone for a whole new financial system. We're talking DeFi, AI, and tokenizing real-world things like art and real estate. BNB, on the other hand, is the gas in the engine for the absolutely massive and constantly growing Binance ecosystem. Let's dig into Ethereum for a sec. The reasons for its potential growth are pretty clear.
The network upgrades have been working, which is leading to lower transaction fees, and that is a huge deal for actually using it. That, in turn, is lighting a fire under DeFi and, maybe even more excitingly, opening the floodgates for putting real-world assets onto the blockchain. And that's how you get to a number like this, $40,000 for 1 ETH. That high-end potential is all based on the idea that Ethereum captures a big chunk of this new tokenized economy, a future where stocks, bonds, real estate, you name it, are all traded on-chain. It's a bet on the platform itself.
Now let's switch over to BNB. Its strength comes from a few really cool things. First, they're constantly reducing the total supply through something called token burns. It's basically like a stock buyback. Fewer coins in circulation can make the ones that are left more valuable. Simple economics, right? Plus, it's the lifeblood of a gigantic and still growing ecosystem. Its value comes from real use, from real infrastructure, not just from hype.
And all that utility is what's behind this 2030 target of up to $6,000. Its value is tied directly to the success of the platform it powers. So, as the Binance ecosystem grows, the demand and value for BNB could grow right along with it.
Okay, so we've seen the analysis of the current market. We've seen the eye-popping long-term targets. But the real question is, how does a pro actually turn all this information into a workable strategy? It all comes down to having the right mindset. So, here's the game plan, boiled down into 3 clear steps. The idea is to accumulate Bitcoin on the dips, especially when it's near a strong price floor. Then you hold on to Ethereum to catch that wave when money starts to rotate out of Bitcoin and into other major players. And finally, you don't just hold BNB, you use it inside the ecosystem to take advantage of its utility and growth. But before you do any of that, here's the golden rule. This is, without a doubt, the single most important piece of advice in this entire breakdown, and you can't ever forget it. No matter what your strategy is, managing your risk has to come first, always. Without that, even the best predictions in the world are useless.
And this is what that looks like in the real world. Simple rules that are incredibly hard to follow. Don't borrow a ton of money to trade. Don't let fear or greed make your decisions for you. And the 2 toughest ones of all, stay disciplined enough to stick to your plan and have the patience to let it actually play out.
Which brings us right to the end here. This whole analysis frames volatility not as something you should be afraid of, but as an opportunity. The big takeaway is that if you understand the market and you have a disciplined plan, you can separate smart trading from just gambling. So the final question is, how are you going to position yourself to trade